2025 was supposed to be the year of climate reckoning. Instead, it became the year the insurance industry quietly seized control of humanity's survival blueprint. While governments debate and emissions rise, insurers are rewriting the rules of risk, and with it, the future of our planet. Let's start with the numbers they don't want you to dwell on. Last year, natural disasters caused $368 billion in economic losses, but only 40% were insured. California's wildfires, the costliest in history. Hurricanes Helene and Milton, $95 billion in damages. Insurers call this the protection gap, a $223 billion chasm between destruction and recovery. But behind closed doors, they see opportunity. Why are insurers retreating from Florida and California? Because risk is no longer calculable. Old catastrophe models fail as wildfires defy historical data. The Atlantic's ocean currents tipping toward collapse, the Amazon dying faster than predicted. Insurers aren't just raising premiums, they're redesigning reality. If you can't afford their new math, you're left to drown. Here's where it gets darker. Insurers now stress test entire economies against climate scenarios. Will emissions drop? Will the AMOC collapse? Your policy hinges on their algorithms. And while banks fret over loans, insurers quietly dictate which cities get rebuilt and which industries survive. Fossil fuels? Higher capital charges. Green tech? Subsidized premiums. This isn't underwriting, it's social engineering. Boards now spend 30% of meetings on climate governance. Why? Because a single misstep, a vague emissions target, a flawed disclosure, could trigger lawsuits or collapse investor trust. The irony? Insurers profit either way. They sell transition plan assessments to corporations scrambling to stay insurable. It's a circular economy of fear. But adaptation is the new frontier. Insurers aren't just paying claims, they're selling survival. Take Centrisk trademark, AI that maps supply chain vulnerabilities, or biodiversity bonds that monetize rainforests. For small businesses, insurance now includes climate advisors and disaster recovery algorithms. Pay up and they'll tell you how to weather the storm. Refuse and you're on your own. Life insurers aren't far behind. Heat waves kill silently, so they're crafting extreme temperature policies. Mental health coverage for climate anxiety, already in testing. The message is clear. Survival is a premium service. Critics call it disaster capitalism. Social inflation, jury awards skyrocketing 57% in a decade, forces insurers to hike liability premiums. Hospitals, truckers, even schools face brutal choices: cut services or risk insolvency. Meanwhile, private equity floods into climate resilience funds, betting billions on water harvesting tech and flood barriers. The winners? Those who turned apocalypse into an asset class. Here's the twist. The real money isn't in premiums, it's in data. Insurers hoard climate analytics like gold, predicting wildfire paths, modeling refugee flows, even pricing geopolitical chaos. When the next COP30 summit stalls, insurers will already be drafting the fine print for a hotter world. So where does this leave us? Insurers wield unprecedented power, but their dominance is fragile. A single policy shift, a US exit from Paris, a trade war over solar panels, could unravel their models. Yet without them, the $151 billion annual disaster bill would collapse economies overnight. Love them or hate them, insurers are the unspoken architects of our climate future. The question is, who's insuring against failure? Subscribe to my channel for more insights on how industries shape our world.